the basic thing. So what is technical analysis? So technical analysis is actually the study of the market action using the charts in order to forecast the future price trends. Trends, we mean the direction of the market. So since we are using the charts, I find necessary to explain how do we create the charts. So, and as maybe you know, this line actually represents the activity of the day. So, but as you can see clearly, we have always an open, a high of the day, the low of the day, and the close of the day. Open is the first trade that we have on this share, and close is the last trade that we have on the by the end of the session. Now, to have a simpler chart, we are using the open, and we put it on the left side of this stick, of this bar, and then we use the close, and we put a small line on the right of this stick, and this stick actually represents the lowest and the highest of the day. Practically, we draw a line from the highest to the lowest, and we put on the left the open, and on the right the close. Let's see what's happening here about the forecasting. So a lot of people are using two candlesticks to forecast what may happen. So, and to be honest, on the candlesticks we have very fancy names, and definitely it's very nice if you are mentioning, let's say, that this is a dark cloud or something, or three black cows, or three white soldiers, or something like this. But the important thing for me, because we are traders and we are not just analysts to show off around, so it's to understand exactly what may happen right after this kind of formation or this kind of picture. So that's why, let's suppose that I have a white one, and then I have a black one. So if I can say that the market will go down tomorrow, I think it's a little bit arbitrary, and actually it doesn't really describe what's happening in the market, because I don't know what's happening before. So you have to understand that we need data to forecast things, and not only two things, right? And another thing that I want to mention here is that forget the names. I mean, the names are maybe sometimes big misunderstandings, right? So if you try to remember what is the formation here, and that's why the market is going down, is very, very wrong approach of technical analysis. So the D1 is forecastable because we have a lot of losers in the market because of the C. At the D, we don't have losers at all, right? Maybe some of them they bought at the top of this day, of the C day, the more accurate it's going to be your analysis. Look at this, an example with lines only, because it's easier to draw them. So, but look at this, up, correction, more up. Why I should sell them here, or even here, right? So that's why now, my system, so it's called trend trading system. Why? Because cannot based on this psychology here, based on the main psychology of the trend. Which means that if the market is going up, why I should sell on those corrections? It's better to buy at the bottom. Clicking here, every candlestick is 1 day, right? Still black and white candlesticks, but it's a daily time frame. If I click here, it's the weekly one, right? So that's why the daily, let's say, is like this one. And now I'm gonna add one line. Check what's happening if this oscillator is going higher than this average tops line. So let's start from here. You see, when this line is going above and is topping and coming down, actually we have a top on the prices. This is the euro, the level 1 on the daily. I said that we have the 10-decade trend definition, failure swings, the real reversal pattern. So the best momentum oscillator, so trend and momentum. Right? So this is the level 1. And what is the immediate benefit? Ability to recognize the tops and the bottoms of the market. Right? So, but what is missing actually is the money management. How much? Right? So, and what else is missing is the pure psychology thing. So the level 2 is the correct time frame. And the last part, but not least, is the human psychology behind the market, and actually I'm talking about controlling your psychology, right? So, and definitely the stop loss is in the market just to help you not to have big losses and small profits, right? So, and the completion of those 3 levels that are webinars, so is the simple, profitable trading system. So what was the best part for you?
Well, everything, as my colleagues they all said, but the best part for me, because before I used to see the lines before the oscillators, but I didn't know how to use them, because it was all like more, I knew that it was to show the uptrend, or if it's uptrend, or if it's downtrend. But the most important part for me is to know what does it mean, like 102, like to know that it's 2% above the, according to the oscillator. So that's the best part. And also I liked the part of the failure swings. Yeah, thank you very much.
Thank you. Thanks a lot. Absolutely.
Thank you.
Thank you very much.
Especially for me, it was nice to the part of the confirmation of the up or down trends, because I think it's very nice to understand quite well this, especially this failure swing points, and to know exactly when the market is beginning to change. That for me, that was the key issue of the whole training. Okay.
Perfect. Thank you, Albert.
For me, the best part was the basics, because sometimes we know, people think that the basics are, everybody knows them, but like Marco said, we don't all have the same level, and the fact to remind some basics like open, close, and high, low, it's really important. So really thank you very much, and your explanation was really clear.
Yeah,
thank you.
Yeah, the best part for me was basically what you touched upon in the end, which is the 3 main points that are required to be focused on to become a good trader, which is the money management, the psychology, and the time frame.
That's correct. Very good.
Which is very important.
I think you got the best part.